Hi everyone, Tim Knight here, Slope of Hope, and I really wasn't planning to do a video, but someone had mentioned that these little videos are his favorite part of the site, so I felt like, okay, I'll do one. So I actually, from time to time, on rare occasions, I do speeches in front of live audiences, and I kind of pride myself in doing them completely unprepared. I mean, at most, I'll have like one post-it with a few scribbles on it in my pocket, but that's about it. I don't know what I'm going to talk about, and that's kind of how these videos are. I hope it doesn't show too much. In fact, for the one or two of you that are listening to this that are part of the Sacramento MAP group, I'll be speaking there in a couple of weeks, on Saturday. Um, anyway, so this is just kind of off the cuff. Uh, Before I start going into any charts, I just wanted to talk a little bit about psychology of the market right now. The During the rise of March 2009 to March 2010, that annus horribilis for us bears. Um, the frustrating thing for the bears was that when the market seems like it should have fallen or should have given us an opportunity to get in. It just didn't. It just kept lurching higher, and it was exasperating. And those of a bearish bent were very frustrated with the market, and like, this isn't doing what it's supposed to do, and this doesn't make any sense, and this is just crazy. And I think that what bears and bulls alike are failing to realize right now are that the shoe is on the other foot. Um, there are times that the market should be oversold. It should go up. It should spring back. Even I've been a victim of this with my WAG thing where I called last week for the market to have kind of a relief rally to about 11:30, 11:40 or so. It never happened. And I'm not so sure it is going to happen. I mean, that's 90 points away right now. And what I've got here, and we're sort of seeing this live, it's as I'm talking, it's 3:18 PST. Um, I've drawn some lines here that are pretty important to me in terms of support and resistance. Um, as you can see, my style of charting is terribly simple. I mean, there's no technical studies or anything. It's just a couple of horizontal lines. And I had anticipated maybe a push somewhere close to this line, and it didn't happen. The most that did happen was that it made and this was Friday, excuse me, got as high as this level, and that apparently is sort of the new resistance zone. And we've got support here, if you want to call it that, at 1036.25, which is about 12 points away. So getting back to my thing, and I'll get back to this chart. The point I'm trying to make is that I think just as we bears were underestimating the power beneath the rally, I think everyone's underestimating the selling strength on this side of things, because every stinking day I'm reading commentaries about, well, we're really oversold now, and here's this McClellan this and this oscillator that, and by God, tomorrow it's probably going to be up 500 points, and it just doesn't happen. We just keep falling. And I've been burned very badly twice in the past year. One is here, back in July of '09 when the famed failed Head and Shoulders took place. And the other time was here, back in February when we had this final awful surge. So I understand what it's like to be afraid of a monster rally. Believe me. I mean, my livelihood is based upon making money in the markets. And if I sort of, short everything under the sun and just turn my monitor off and go bike riding for the next several weeks, that's not going to happen, because I don't know what might occur to make this market rally. So I approach each day with caution. In fact, even today, I entered today completely short, and I felt pretty confident about the weakness of things. But I bought into BGU, the triple bullish, ETF early today just as a safety net. And that was my stinker of the day. Lost some money on that. So even I, Mr. Bear, am going in for these insurance policies, and even at this very moment, I'm, kind of watching. Okay, we're up 3/4 now. What will it look like in the morning? So I completely understand the fear of something like July '09 or February of 2010 happening again, and this wonderful environment for the Bears we're in just getting ripped out from under us. But so far, it seems to me that the selling pressure's there, and let's face it, looking at the world, be it North Korea or Spain or poor old Gulf of Mexico, the euro, you name it, there are many, many things which any one of which, or something that we're not even anticipating, would completely blow the market up. If a country pulls out of the euro, or if North Korea declares war, or if God knows what else, that will be the one and only thing that it takes to have the Dow rip down 700 points. It's a very, very fragile environment. And my impression, my God, I'm just going to talk all this time, you're not going to see any graphs. My impression is that I don't really know what else any government can do to shore things up. 14 months ago, people were a lot more naive about the magic of the government. And trillions of dollars later, the faith is being lost. And at this point, I think any government action will be ineffectual. I think they're out of bullets. Interest rates are at zero. The trillions of dollars that have been pledged. What else are you going to do? So I think that the bear market is back, and I think the power is in the hands of the bears, and that needs to be appreciated and used, because there's way too much fear and uncertainty, I think, on the bears' part. And I'm speaking to myself as much as I'm anybody else. Earlier today, I will mention that I was, as I said, somewhat trying to hedge about any kind of bounce. One thing I bought and sold at a loss was XLB. Clearly, it was not as low as it is now, but this had been approaching this support line from back in November of last year, and it's pierced it now. So even things which are, put it in quotes, oversold, have fractured the support levels. BGU, earlier today it actually looked pretty enticing as far as a bounce play between these two levels, as far as a channel play. Here again, it certainly doesn't look bullish, and it almost looks bearish to me. It looks quite vulnerable. So what I'm illustrating here is my stinkers of the day. So from my point of view, I've got 188 different shorts. I started off, as you know, with more than that. I started off the day with, I don't know how I closed out so many positions, but it just went by in the blink of an eye, like 250 shorts. I did take profits on a portion of those. I felt that the risk reward was such that I should go ahead and take profits, but 188 shorts still remain. And tonight I've yet to go through my 823 items in my core watch list to see whatever other opportunities there might be. So as I sit here, I am 100% short, 188 shorts, no longs, no ultras, and I've got lots and lots of buying power left in case I see other opportunities. But the general picture for me is that I am targeting the low 900s, let's call it 925, as a good exit point. I had thought that we would form some sort of right shoulder here and take the plunge, but it may well be that this right shoulder is somewhat deformed, and we get that fall anyway. So that's sort of my general game plan. Anyway, having a lot of fun with this market. Hope you are too. Hope you're making some cash at it, and just wanted to kind of get this off my chest. Thanks, good night, and I will see you on Tuesday morning.